Hello everyone, Chris LaChava with RE/MAX Heritage Professionals, and in today's video I want to talk to the buyers out there and give you some tactics to deal with the high mortgage rates. Now, we are fortunate in that rates have come down from the high of 8% that they were, and they're closer to 7.25% now, but they're still higher than they were and still higher than a lot of people are comfortable with, and so there are some tactics to utilize to help save yourself some money. The first one is to ask the seller to help reduce the mortgage rate. You might be wondering, how does a seller do that? The bank's kind of setting what the interest rate is. Actually, what the lenders can do, or what the sellers can do, is basically pay your points for you, buy down the interest rate. A lot of sellers nowadays are starting to offer 2-1 buy downs. There's home builders, new home builders, that are offering buy downs as well, where they'll pay maybe $10,000 and buy your rate down 2 percentage points for the first year and a percentage point the second year. That can save you significantly, because then in the third year, when your rate is going to be whatever the prevailing rate is, you could refinance, and hopefully by that point the interest rates will be lower and something that you're more comfortable with. That can save you hundreds of dollars a month if you are able to do that. The second thing you can do is you can use part of your down payment to pay down debt. So one of the factors that lenders look at is your debt to income ratio. So if you pay down some of those debts and your income's higher, that may lower your mortgage rate as well. And so that is another option, another way to combat high mortgage rates. You could use home buyer assistance programs, especially if you're a first-time home buyer. There's a lot of programs out there. Florida has had a number of programs, Hometown Heroes, although that's almost out of money. But different counties have home buyer assistance programs that you could utilize as well to help with your closing costs or other aspects of your down payment to help save you money on your purchase. You could ask for seller financing. Now, a lot of sellers aren't going to do that. But it could be for the whole value, could be for part of the home's value. So there's a number of ways you can do that, but essentially the seller becomes the bank. Again, a lot of sellers are not going to be interested in doing that, but there are some out there who are happy to do that. And so that could be another option. The other thing to do is don't wait for a rate you like better. If you find a house you like, you need to jump on it. The rates are going to change, but that house may not become available again for several years, if at all. So go ahead and buy the house, and then use one of the other tactics to get the rate down if you want. Another thing you can do is not to get distracted by things you don't need. If you don't really need to have a pool, then looking at homes without a pool can save you some money, plus there's the maintenance costs. So that's one of the things you can do. The other thing you can do is buy a house that needs work. You're not going to face as much competition for those. You might even be able to use a renovation loan to finance the renovations as well. And you'll buy that house much cheaper. And if you're frugal or you can do some of the work yourself, you might be able to save some money there. Build a house or buy a brand new one. Again, I said that there's a lot of home builders that are offering lower interest rates. I've seen them as low as 5%, 6%, 5.85%. And some of them, it's for the life of the loan. It's not just for the first 2 years. It's not a 2-1 buy down. It's a buy down, permanent buy down. So you could get a really good deal on a new home if you can deal with an HOA. You can deal with maybe smaller lot sizes. But just to get in a home, you're not going to have a lot of maintenance costs for the first few years. So that's another way to save yourself some money with those high interest rates. And then finally, you could always rent out part of the house. If you don't need all of the rooms, you can rent out a bedroom or something to offset some of the costs of your mortgage. Anyway, I hope you found these tips helpful. Just because mortgage rates are higher doesn't mean you can't purchase a house right now. You just have to be a little more creative and think about some outside the box ways of potentially saving yourself your money so you can get into a home and stop paying someone else's mortgage, because when you're renting, that's what you're doing. You're paying someone else's mortgage. Anyway, I hope you found this information helpful. As always, if I can help you with real estate here in Central Florida, I'd love to help you or your family or friends. Please subscribe to my YouTube channel. I love to have you on here. Have a great day, everybody.